Hi guys, how are you? Right, I trust you're all doing great. I trust you all had a great night, okay? So here we are once again, guys. I wanted to explain deep about this strategy that we are using, right? The strategy that we are trading currently, okay? So number one, the first thing that you have to know is the breakout structure, isn't it? So before you know the breakout structure, you must know market structure, right? What is market structure, right? I think there are videos, there are a lot of videos whereby I explain market structure, right? What is market structure? How do you trade market structure, right? I think there are lot of videos explaining that, okay? But here I won't go much deeper into market structure, but I'll just browse through it, okay? So I'll just go over it, right? So market structure is nothing more than the character or the trend of the market, isn't it? So it is what it is the trend of the market. By the way, it is the nature of the market. Is the market bullish? Is the market bearish? Right. So that is structure. That is structure. When we're looking for structure, we want to find that are we bullish? Are we bearish? Are we about to what to be bearish, or are we about to be bullish? Right. So we all look that as what as part of what of market structure, isn't it? So now, what is this market structure, by the way? So how do I see a market structure, right? So in a downtrend, I mean in an uptrend, right? As you can see, this is a what? This is an uptrend, isn't it? So this is an uptrend, right? So in an uptrend, we are looking for what? In an uptrend, we are looking for what? For the higher highs and what? And the lower, the higher, it's the higher high and what? And the lower high, isn't it? So the market create what? Higher high and lower highs, isn't it? So I mean higher high and higher lows, right? So this is our higher high, this is our lower high, higher high, lower high, higher high, lower high, right? So the market, when it goes up, it creates a what? A higher high, and then retests create a lower low, right? For us to see that the market is still bullish, we want to see the market breaking the higher high again. So we're breaking this higher high, right? Then we return back around the level of the previous higher high, right? If you don't break it and continue going up, breaking this higher high, then that would mean this is a what? This is a continuation of a what? Of an uptrend, isn't it? So this is what we are basically looking for in an uptrend, right? That's what we are basically looking for in an uptrend, right? So obviously I'll be quick, guys. I'll be quick, right? So now again in a what now? So now we are what in a downtrend, isn't it? So we've got what? We've got the higher highs and we've got what? The lower highs and the lower lows. Lower highs, lower lows, lower highs, lower lows. Right. So the market, it was going up, created a what? A higher high. It broke the previous higher high, right? Came back and retest, creating a what? A lower high, isn't it? A lower high, right? Go down, we break the previous what? The previous lower low. That means this is what? This is a continuation of a downtrend, right? We go up, but we reject around the what? Around the area of the previous lower low. Then we continue going down, right? Obviously, we must what? We must break this lower low, right? So this is what we are looking for in what when it comes to what when it comes to market structure, right? This is what we are looking for. So when the market is like this, you know that okay, this is a straightforward trend. The market is going up or the market is going down, right? So this is what you are looking for, right? So now when we now go into what when we now want to see the breakout structure, what do we mean by a breakout structure, right? So breakout structure, it symbolizes two things, right? Number one, it symbolizes a continuation of a trend or the change in market structure, right? The change of direction, right? So it can indicate a continuation. The market is in a straightforward trend for a week. Let's say maybe we are bearish for a week. So you want to see that short-term breakout structure, then we take our short entries because we're looking for what? We're looking for a continuation. So it can act as a what? As a continuation. Also it can act as a what? As a reversal. Okay? So what do I mean by that? So let's say the market was what? Was going up, what's going up, throughout the week, right? So now here I am, right? Uh, wake up in the morning, the market is like this, right? So what I have in mind is that okay, we broke the structure, isn't it? So we broke what? We broke our higher high, right? We broke this higher high. So when I see something like this, I'm aware that okay, we are still in an uptrend, right? So I cannot be looking for short when the market is like this. Why would I short? Because we are still in an uptrend. But I know that we might retest, isn't it? So I know that we might what? We might retest, right? Now what are you looking for? You are looking for that retest, isn't it? So this retest is our entry point, right? That is where we are looking for our entries, right? At that retest, right? So what are we looking for in this retest? We're looking for what? For a fair value gap, right? So here we are looking for what? For a fair value gap. Do we have a fair value gap here? If we find a fair value gap, then that is where we'd be looking for what? For our long entries, right? So we saw what a breakout structure. Then we see what we're looking for what now? A retest. So a retest doesn't mean that we must short. It means that we must what? We must look for what? For possible entries confirming the trend of the market, right? So it's just a retracement, but long term we're what? We're bullish. So I'll be looking for what? For that buy entry on those areas, right? So I take my entry here. You can target. Remember, our target is always 2%, but based on this example, right, you know that your stop loss is always what? It's always the lower low of the second candlestick from your fair value gap, isn't it? So this is how you trade it. This is how you trade it. We're looking for that retest. After that breakout structure, we're looking for what? For that retest, isn't it? The same thing applies in a downtrend. The same thing applies in a downtrend. We know that there are what? There are lower lows and lower highs, right? So the market maybe was going up, hit a what? A higher low. We break structure. That is it. That is it. We break structure, right? So as soon as I break structure, I see that okay, I've broken structure. Maybe this is the 15-minute time frame which I prefer mostly. So once I see this break of structure, right, do I find a fair value gap? Do I find an order block, right? So where do I look at an order block? Right, I'm looking an order block somewhere around these areas, right? Do I have an order block somewhere around these areas? Do I have a fair value gap somewhere around these areas, right? So when I find the fair value gap, I know that the market, it must what? It must retest, right? It has to retest, isn't it? Then when it retest, I'll be looking for what? I will be looking for short entries, okay? So take my entry. That's it, right? So I'll be looking for what? I'll be looking for short entries. So that is the only thing that you need to know about this strategy. That is the only thing that you need to know about this strategy. We're looking for what? Breakout structure and a retest, right? And a retest. Then that is when we take our what? We take our entries. Okay. So right, I'm done talking. Right, I'm done talking. So let us see if you can find this on the market. If you can find this on the live markets. Okay, so we'll just back test on it and see if you find it. So let me just, okay, then I can even leave it like this, right? So my first example, I don't know, where can I start, right? Where can I start? Where can I start? Right. Okay, so we can even use this one, right? So you can see what happened here. We have the what? The start here from 18 October. Is it October? Right. So start here, right? Then this was our long-term breakout structure. Then do we have a fair value gap? Yes, we have a fair value gap, right? So I'm looking for that retest, right? This is my fair value gap. Do we retest back into it? Yes, we retest back into it, right? So then what you must understand about this fair value gap, right? Because we have another fair value gap here, right? If you can look closely, you'll see that we have what? We have another fair value gap here, right? So because we have that fair value gap, right? Now when I take my position, that means my stop loss will be a little bit wide, right? It will be a little bit wide because I'm aware of a possibility of us going into that fair value gap. So I can make it wide like this. You can see still not more than 2%, right? Do I target? So because of the risk here, I can even make it 3% on spot, of which we won, isn't it? We won. We took we got the trade, isn't it? Right. Same thing applies here, right? Let me cancel this. We're done with this one. Same thing applies here. A nice breakout structure. Boom. A breakout structure. Right. A breakout structure. Right. So if you can remember, I said to you, and look, when we have this type of fair value gaps, right, we want to take our entries right at the end or around the center of the fair value gap, right? So this was a perfect example whereby this trade it goes through your fair value gap, it fills your fair value gap, all of it. So we fill the fair value gap, right? Because now you can see, because this fair value gap is wide, it is very very wide. This is a very very wide fair value gap. So I will have been within this trade, right, somewhere around around the end of the fair value gap. That's why I take my trade, right? Stop loss can take this week here as my stop loss, right? But I recommend it to be always 1%, right? So 2% on spot, do we make it? Yes, we make it, right? So I'm looking now, do we have another breakout structure, right? Can I capitalize on something again, right? Okay, you can see this what? There's this clear break of structure, break of structure. We break our structure, boom, right? So once we break our structure, do I see a fair value gap, right? Do I see a fair value gap? Because now we break our structure, the market is going down, right? You can see we're breaking our what? Our lower low, right? So the market is what? It is bearish. So there is a continuation in this market, right? So because of this fair value gap, it is not very very wide. Then I can take my what? I can take my entry like right at the beginning or at the starting point of my what? Of my fair value gap. So this is my entry, stop loss, ideal, right? Sorry about that. It's not a, it is a short. Okay, it is a short. I'm looking for short positions right at the beginning, right? Target, do I have 2%? Yes, I get 2%. Okay, so this is what you are looking for basically in the markets, right? That is what we are looking for basically in the market. You can see we have the what? We had a breakout structure again here. Breakout structure. Then once we break our structure, you can see the market what it returned back to the what, to the fair value gap. That is why I say if you see a lot of fair value gaps, just your stop loss it must be wide, because you can see here we did went up to this fair value gap and we took it and we capitalized on it. The market then started what? Started going down, going down, going down, going down, right? Same thing applies here. We have a short-term break or structure, right? We break this lower low, right? So once we break this lower low, okay, once I break this lower low, now I'm aware that okay, the market it must what? It might what? It might go down. Do I have a fair value gap? Yes, I have this one, I have this one, I have this one. So I can just mark this area as my fair value gap zone or as my point of interest. Okay. So you can see that it is wide, by the way. So I can take my entry at the center, right, at the center of my what? Of my fair value gap, right? And it's also important to mark your trading times, right? The trading times know when the market is volatile, right? Where you can when can you capitalize on the market, right? It is very very important to know as a trader. Okay, so because of the risk, you can see your what you made profit. That's it. So same thing applied here, right? If you were around this trade, if you're around this trade right in the morning, early in the morning, you could have seen that here what we had this break of structure, short-term break of structure. We break our high, right? That's nice. Okay. So do we retest? Yes, we retest. So do I have a fair value gap or an order block? Yes, I do have a fair value gap. In fact, I have both. But since I am a fair value gap trader, I don't trade order blocks. So you can see that okay, you got this one. That is great, right? Take your what? You take your short term, the short term long entry, isn't it? It is your short term long entry. Target is 2%. Could have made it. Could have made a 2%. Stop loss. I think this could have been an ideal stop loss, not very wide and also not very tight. Okay, so this is it. This is it. So now also keep in mind that we have what? We have this big or giant fair value gap, right? We have this giant fair value gap. This giant fair value gap. I don't know if you all see it. So we have this giant fair value gap, right? So now once you've made that 2%, right, I will just wait. I will just wait because I believe the market, it must fill all of this gap, right? So I will just wait and see what the market is giving me, right? Maybe look for long entries again if I find a long entry that can take me up to those towards the end of the fair value gap, because I believe the market, it can go up, then we fill the fair value gap, then we continue going down again, right? So okay guys, this is a strategy. This is how you trade it. So thank you so much.